Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secret language of big business. And today we've got a doozy from Constellation Brands Incorporated, a company known for its beverages, and their latest report might just spill some interesting details. Before we dive in, if you like cutting through the corporate jargon to get to the real story, make sure you are subscribed, and if you want to connect with other curious minds about all things finance, join our Discord community, link in the description below. So what we have here is a report that is essentially Constellation Brands telling the world how they did financially for their third quarter, which ended on the 30th of November 2025. This isn't just some casual chat, it is a formal announcement filed with the Securities and Exchange Commission. Or SEC, think of it as the company giving its official update on its money matters. Now, a lot of companies in their announcements mix in what they call non-GAAP financial measures. What does that mean? Basically, these are numbers that don't strictly follow the standard accounting rules, generally accepted accounting principles, or GAAP they might exclude certain costs or make other adjustments. Constellation says they do this because they're management, and they believe investors too find these comparable, adjusted, or organic numbers helpful to understand the core health of the business, kind of stripping away the one-off items to see how the main operations are really doing. And who is signing off on this important update? It is Garth Hankinson, their Executive Vice President and Chief Financial Officer. That tells you this is a pretty significant report, coming straight from the top financial person at the company. Let's take a quick peek at what is actually being traded out there. Constellation Brands has class of common stock, and you can find that under the ticker symbol STZ on the New York Stock Exchange. This is the main way most people invest in the company. The core of this filing is really about the company's performance. They're letting the public know their financial condition and how well they performed during the quarter. This is crucial information for anyone considering investing in Constellation Brands, or for those who already are. They're essentially saying, here is how we're doing financially. This report is really just a cover for a more detailed news release that has all the juicy financial details. They're attaching that news release as an exhibit, which means it is part of the official filing, and everyone can go look at it. But wait, there is more. On top of reporting their quarterly results, their board of directors also decided to give some money back to their shareholders. They declared a cash dividend. For the class of common stock, it is $1.02 per S-share, and for their Class 1 convertible common street OC, it is $0.92 per S-share. This payout is set for the 12th of February of 2026, and you had to be a shareholder of record by the end of January to get it. This tells us that the company is generating enough profits to share with its owners, which is generally a good sign. And the really detailed stuff we're talking about, the actual financial results and their business updates, that is all in Exhibit 99.1. That is where you'll find the nitty-gritty numbers they released on the 7th of January. Now, let's be real, the most important part for most investors is how the company is actually performing. When we look at companies like Constellation Brands, which is a major player in the beverage industry, we want to see growth, profitability, and a solid strategy. They're known for their beer, wine, and spirits, so their performance is directly tied to consumer spending and trends in those markets. Are people buying more premium brands? Are they switching from one type of drink to another? These are the questions their financials should answer. What we typically look for in these reports are things like revenue growth, profit margins, and how they're managing their debt. A company that is consistently growing its revenue means more people are buying its products. Healthy profit margins mean they're selling those products at a good price and keeping their costs in check. And managing debt well is crucial for long-term stability. For a company like Constellation Brands, you'd expect to see these numbers reflecting demand for their popular products, maybe from brands like Modelo or Svedka, depending on how those are performing. We want to see if they are gaining market share or losing it to competitors, in my opinion. While the report itself is just a snapshot, the real story is in the details of that attached news release. It gives us insights into their revenue, earnings per S-share, and any forward-looking statements that hint at their future expectations. The fact that they are paying out dividends is a positive signal, suggesting confidence from the board in the company's financial health and its ability to generate consistent cash flow. However, without seeing the actual numbers from the release, it is hard to give a definitive assessment of their direction. But generally, companies that can consistently grow their top line maintain strong margins. And reward shareholders are on a solid path. The risks typically involve market competition, changing consumer preferences, economic downturns, and regulatory changes. A key opportunity for Constellation would be expanding into new markets or innovating with new products that resonate with evolving consumer tastes. Alright, that is our quick decode of this Constellation Brands filing. What is your take on these announcements and what they signal for the company's future? Drop your thoughts in the comments below. If this breakdown was valuable, Hitting that like button really helps us out, and subscribe for more deep dives into the corporate world. Don't forget to check out the Discord link in the description to connect with fellow analysts. Thanks for watching, and we'll see you next time.